High prices, slow growth, and investor panic. Are we heading into stagflation? In April 2025, former President Donald Trump introduced a sweeping tariff policy called Liberation Day, triggering a wave of economic uncertainty, rising prices, and market declines. In this video, we'll break down what stagflation is, why it's back in the headlines, and how Trump's tariff policies could push the US economy into dangerous territory. Stick around to find out what you can do to protect your wallet, your investments, and your future. Let's start with the basics. Stagflation is an economic scenario where inflation remains high while economic growth stalls or contracts and unemployment rises. It's rare and dangerous because most economic policies can only target one problem at a time, either inflation or recession, but not both simultaneously. The last time the US saw stagflation was in the 1970s, and it took a painful recession to get out of it. On April 2, 2025, Donald Trump announced a bold trade policy, a 10% tariff on most imports into the US, a 25% tariff on all car imports, and a massive 245% tariff on goods from China. The move was positioned as a way to liberate American manufacturing and punish countries seen as unfair trade partners, but the result? Soaring import prices, supply chain disruptions, and retaliation from global trade partners. Here's what we're seeing just weeks later. Inflation is ticking back up as import prices surge. Consumer goods, clothing, electronics, even groceries are getting more expensive. GDP growth forecasts for 2025 have been revised downward. Economists like Adam Posen now estimate a 65% chance of a US recession by year end. Combine high prices with weak growth and you have the perfect conditions for stagflation. Major retailers like Walmart, Target, and Shein are already raising prices. Ford and GM are cutting costs and delaying international expansion. Consumers are facing higher prices on everyday goods, rising interest on credit cards and loans, and layoffs in import-dependent industries. Small businesses are hit hardest. They rely on global suppliers and now face both higher costs and weaker demand. A Bank of America survey revealed the most pessimistic investor sentiment in 30 years. Stock markets tumbled after the tariff announcement, especially in retail, tech, automotive, and consumer discretionary sectors. Meanwhile, we're seeing a flight to gold, energy stocks, and cash and bonds. The Fed is in a tough spot. Their hands are tied. If they lower rates to boost growth, they risk fueling inflation. If they raise rates to fight inflation, they risk deepening the slowdown. As of now, the Fed is holding rates steady but signaling caution. They're waiting to see how deeply the tariffs affect the economy. This uncertainty is leaving investors, businesses, and everyday Americans in limbo. 1. Cut non-essential spending. Focus on essentials as prices may keep rising. 2. Rebalance your portfolio. Add safe havens like gold, bonds, and dividend stocks. 3. Build cash reserves. The economy may tighten, so flexibility is key. 4. Watch Fed updates. Monetary policy shifts will influence the next market move. The threat of stagflation is real, and the next few months could reshape the US economy. If you found this breakdown helpful, like this video, subscribe and drop a comment below. Do you think the US is headed into stagflation?